Hey everybody, my name is Brandon from the StockStreams.com, and today I want to talk about SOFI stock, ticker symbol SOFI, and how it is up over 10% in just a few days. So now let's get started. So here we are on SOFI stock, and we can see in about 3 days we are up over 10%. Now this is a pretty volatile stock in general, and we can see that we've been trading in this kind of 10% range for a while now. So this move of 10% in a few days is not that surprising. And because of this, I think that this could be a good stock to do short-term trades on, buying at the low end here around $15 and trading it up around the $16 or $17 range. We'll get more into the trading levels in the last part of the video, but in the first part of the video here, I want to talk more about what SOFI does and the macro picture of how this company fits into the world. And to do that, we can actually look at the news here and we can see that there's a lot of positive sentiment on the stock. So first things first, what SOFI is that at its core, it looks to be a financial tech company. We can see here in SOFI's own website all the products that SOFI has to offer, and what is interesting to me is the variety of products. Now, just quickly, I do not use SOFI's products at all, but SOFI looks to be reaching quite a few people with over 2 million members. This, I think, is where we can start comparing SOFI to other companies in the same field, such as Robinhood, the broker trading app that a lot of people love to hate, and even something like Rocket Mortgage. We'll focus mainly on the comparison between Robinhood and SOFI, and I want us to focus on the differences between the shotgun variety approach of products that SOFI has versus a targeted single product approach which Robinhood has. To me, the business theory that SOFI and Robinhood are representing is the general versus the niche business plan. This may not be the best example, but I like to think of this as Walmart versus Nike. SOFI is similar to Walmart in this analogy, a general place where people can go to look for a variety of items and products. In SOFI's case, a general store to look for financial products from stock trading to loan financing, and maybe even insurance and credit cards. Robinhood, however, is Nike in this example, where people go for a specific item, in Robinhood's case, only stocks or crypto trading. Of course, as always, both business plans has its pros and cons. For instance, Walmart likely generates a lot more leads, or the amount of people who actually go to the stores and go to the website to find something, because they have a larger variety of products that appeals to a wider base. However, Nike likely has a better conversion rate, or the amount of people who actually buy stuff versus the amount of people who go to their stores. Obviously, you want to maximize the amount of people who come into your business, and also you want to maximize the conversion rate. However, it is hard to do both, which is why businesses often have to choose to distinguish the brand as a general or a niche business. But that stuff is just classroom theory. If we look at the actual results of what's going on between SOFI and Robinhood here, we actually see a surprising result. Because we said that SOFI was the general store and Robinhood was the niche, I would expect SOFI to have a larger membership base or a larger amount of people using the platform versus Robinhood. And we can see that this is not the case, with SOFI having only about 2 million members, while Robinhood has about 13 million or so users. The numbers change slightly depending on what source you look at. So this may be an unexpected result, and honestly, a not so good result if you are bullish on SOFI. There's a question here on why was Robinhood able to grow to 13-ish million users when the company was founded in 2013, while SOFI was only able to reach 2 million users when it was founded in 2011. That's something that investors should consider before making a decision on SOFI. However, again, macro story here. SOFI does have a wider base of products. That diversification of products likely leads to a more stable business than competitors like Robinhood, where retail interest in stocks will go through cycles. With exposure to retail stock trading, and especially loans and credit cards, SOFI will likely have a more robust business, a more stable business. Investors can also say that because SOFI has only reached about 2 million people, that is just a small portion of the total addressable market. So there may be more growth ahead than if investing in an already big business like Robinhood. However, I do not agree with this logic. But at the end of the day, investors are likely very interested in financial tech right now because of the growing total addressable market. I think that this is the biggest tailwind for the sector as a whole. Because millennials like to figure out their finances on their phones instead of talking to people at banks, and mostly because financial tech companies are not too hindered by regulations like the big banks are, so Financial tech companies are able to innovate quickly and move quickly to satisfy the customer demand. I think this is why investors are most interested in financial tech companies right now and will likely be interested for at least a little while longer. So after talking a lot about the macro picture of SoFi and financial tech in general, now let's talk about how SoFi is doing as a business by looking into its most recent earnings report. So here we are in SoFi's most recent earnings report, the one for the first quarter of 2021. And the first thing that I want to point out here in this tab is the membership growth. SoFi looks to be growing quite well quarter over quarter as well as year over year. So as we go through this earnings report, I want to keep this in mind because this is a fundamental bull case for SoFi. We are growing the amount of customers that we are reaching. And if we switch over to this tab here, we can actually see that our revenues are also progressively increasing as well. We can see here that this is the most recent quarter, the first quarter of 2021, and we can see that the adjusted net revenue here, the non-GAAP version, is around $216 million. And we can see that that is good growth quarter over quarter as well as year over year. However, another thing that I'm noticing while looking at SoFi's numbers is that SoFi appears to be a pretty cyclical business. We can see here that some quarters will report some low numbers, but also will report some high numbers over here. And we can see that in this year as well, the fourth quarter seemed to be quite weak in 2019 versus the second quarter of 2019. It's normal for businesses to have high seasons and low seasons. However, for SoFi, it's a little inconsistent. We see that the peak revenues for 2019 was in the second quarter here, while in 2020, it was actually the third quarter over here. And we see that the weakest quarter in 2019 was the fourth quarter, while the first quarter was actually the weakest in 2020. So this is not an inherently bad thing for the company, but investors like consistency. Investors like to know exactly how much money is coming into the business for any given quarter. And from what I can tell from SoFi right now, looking at these numbers, it's really difficult to tell if the second quarter of 2021 will be higher or lower than the first quarter of 2021. For a growth company, you should definitely be keeping an eye on the values of the revenues that's coming into the business. And you should be paying attention to make sure that those revenues are not coming in unexpectedly too low for the quarters. Moving on down here to the adjusted EBITA, or the earnings before interest, tax, and amortization, we can see that we actually have a positive EBITA here, which is around $4 million from this $216 million revenues, which means that the EBITA margins are about 2%. And note that this is not net profit or loss. Again, this is a financial tech company, so their margins will likely be low. Because the margins are so low, you really want to focus on growing the revenues of the business. The last thing I want to mention in the earnings report is this chart that I pulled up here in this tab, which is the guidance for 2021. We can see that they set 2021 guidance for the full year at about $1 billion in adjusted net revenues here, with about $27 million in adjusted EBITDA. We can see that this positive EBITDA here will be the first positive EBITDA that SoFi has had in the recent past. This is good news, but for investors, the risk is that SoFi misses this mark and reports a negative EBITDA again. So after talking about SoFi's earnings report, now let's take a look at SoFi's trading charts to see if there's a level or two to buy SoFi if we want to buy SoFi. So here we are in SoFi's trading charts, and we can see that SoFi is at the top of our short-term trading range here, made from these candles over here at around 1650, and it's close to our older trading range here, made from the tops of these candles over here, around $17 to $18. We can see here that a base is forming around the $15 level here, which is also the support level that we tested in the past. Because we are about 10% away from our base to where we are right now, and about 5% away from the tops of these candles here to the resistance level up here around the $17 to $18 range, I would say that our risk reward at this point is not too good for new money. I think closer to this $15 level would be a much better place to pick up the stock. Looking at the MACD and RSI here, which is this chart and this chart down here, we can see that our short-term momentum, which is this blue line here, is stronger than our long-term momentum, which is this orange line here. That is a bullish sign for SOFI stock, indicating that we could see an upward push from the short-term momentum. If we look at the RSI here, we can see that we have bounced off of oversold territories over here and clawed our way back upwards. If we look at the past here, we can see that SoFi does like to bounce into this oversold trading range down here. And that would be another signal that I would be looking for if I wanted to expand my position or start a position in SOFI. So that was my review on SOFI stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.